This is a good example of where you don't chase the price, even though it looks like it printed at 116. Low was 116.41. We had a limit order in at 16.37. Do not chase this price. That's part of the rules. Even though it was on the scan, don't, just because it didn't hit your order doesn't mean you buy it when it's this much higher. That's how you lose money. Don't chase. At the end of the week, you can take the limits off. Trailing stops, they stay on. Trailing buys stops, they stay on. Something what we were just looking at. Yes, sir. Oh, it was down here, AJG. Something like this. This is good forever till it either activates or it times out. Or ages out, I guess is what they call it. I call it timing out, where the order just drops off. Usually it's about 60 to 90 days. Each brokerage is a little different. E-Trade, I had never figured out what their time frame is. They seem to come and go as they please. But overall market seems like it's up. It's only Tuesday. Yeah, the market's flat overall, but our portfolios are all in the positive. So you can't correlate the two. Institutions trade all of these ones that are away from the market. They're the ones that move the market. You and I, we don't do it unless you get into 500 to 1,000 shares per trade at $141. That's when you start talking institutions, hedge funds, maybe a millionaire, billionaire sitting around, got nothing to do. Maybe he's involved in something. But don't be fooled. Your trades mean nothing. What we're doing is we're taking that money away from them. They're looking for really small moves when they want to make their money. I mean, if they're lazy and they got way too much money, they don't give a shit. They just stick it in there and collect the dividends. And if they sell it one day, that's usually when you see this big red spike down. Don't try to play like the pros do. You can't call them pros, but just the big hedge funds, the institutions, they control the markets. Don't try to play like them. Stay small. Stay within your scale based on the size of your account. Can't stress this enough. Look, if you're just starting off and you've only got $10,000, start off small and spread it out. Try to get as much. I would concentrate on CEFs. Go look it up. Closed-end funds. We're getting some movement out of oil. And here's an example of one that was I want to say this was about a year ago, maybe a year and a half ago, where this was probably a option trade that basically would, if we're selling, because I never buy options, I'll only sell them, and I only sell them on the put side. I would put one contract based on the size of this account, but it's still a substantial amount. When you start taking 2,900, 2939 divided by, let's just say 60 at the time. Oop. Dang it. 2939 divided by 60 grand. I mean, that's 4% of your portfolio, 5% of your portfolio. See, if that went to zero, as an oil company going to zero, probably not. But it's possible, not probable. So stay focused on that kind of stuff. Don't involve yourself with the options, because all we're doing is collecting dividends on this, because we're way over on the max shares. Max shares on this thing is maybe 40. Let's take a look over here. This is what I say about getting in over your head and not being able to trade it, because you're over. I don't even have it on there. I'll have to work it out. But that's where you get into trouble. I know it's no more than what, like Murphy oil. Is Murphy on here? Yeah. So we hadn't traded this in a while either, right? Because what has happened to all my max share stuff? I know that was on there. It's like, well, it's 47. I know. I just looked at it. Sometimes these charts mess with me, but 47. We can't add any more to it, even though we're below our average cost, right? We can't add to it because for one, it hadn't come up on the scan. Two, we're over on max shares, so we just have to sit tight. Now, if let's just say this account just happened to go over 100,000, now we can go 20%, right? But still, the max shares doesn't allow you to do it. Get up to 300, now you're, on the over 200, you'd be 30%. Over 300, you'd be over 40% of your max shares. But once you get to max shares, you sit on it. and you just wait to get out of it, and then rinse and repeat. What that is that's your risk. That stops you from going off the cliff. And it's important. So when you buy something, you want to sit on this stuff. If it goes your way, great. If not, like USO, here's another one. It had some kind of split, I remember. That's another one of those ones. Well, you can see, I don't even know where the 100 mark is on this thing. Doesn't matter. That's the zero. Well, there's 0 there. So I don't know. We're just waiting for it to come back up on the scan. Hadn't come back up on the scan, we can't mess with it. There's a reason why it's not on the scan. So yep, market is closed. So what do we end up with? Wasn't much on the day. Looked like we ended up with $5.59, $1.20 in dividends. So still another positive day. But the main thing that you're looking at is this number here, your average per day. Okay, 111.79. So you can have those off days. So if you're not sitting around looking at this, because who wants to sit around for $7, right? I don't. Ain't nothing going to come rushing to you. So we end up with 73.71 per day last month. Month before, 76.18. Month before that, 65.50. So the whole idea is to keep it consistent, right? Because at the end of the year, if you're up 20%, it only takes you 3 years of this, which is not taking any losses, and then you've doubled your money. So this, in 3 years, from the time we're looking at it, if it was 60,000 when we started, it's going to be 120,000 in 36 months at 20%. It's just math. That's not adding any money to it. If you're adding money to your portfolios, you're still working. Take 10% of your earnings, 15% of your earnings, your take home, stick it in the market, be careful, and follow the scan, follow the rules. Next thing you know, you're doubling your money. Next thing you know, you don't have to work because your money's making more than you can make. And that's how it happens. But too many people want the get rich quick scheme, and they're willing to take that risk for, making that. They think they're going to make $1 million on the trade. Now, that's happened, Somebody gets lucky, and it's usually luck. The best thing you can do is concentrate on getting as many occurrences as you can, and try to stay in that anywhere between 10 and 20% take home per year, and your accounts just double. So if you had 10,000, 3 years you'd have 20. That's not adding any money. I'm just saying, we're not adding any money to these accounts here. We're just showing people how you can make money by being disciplined and following some rules. But take that to the bank, because that's where it's at. When this market comes down, you'll be able to see how you'll be able to double your this value right here. Let's just say we're not taking any profit because the market's crashing, which it will one day. So if we look back, let's just take an average. We don't know from month to month, right? But we get a pretty good idea. 555, that's total dividends for the month. There's one 670, because this is going to change based on quarterly versus monthly versus annually. There's 687, right? So you can see it's come down. We're at 314. So let's just say we make 500 a month. So that's $6,000 in a year on 120,000. So that's going to be what, 0.8%. So you're still beating the market, and the market's crashing. So you're collecting all this money, and now you're buying at lower prices with that money that you put in. That's not even adding any money to your account. As you can see, these accounts have a lot of cash sitting in them. 21,000 on a $60,000 or a $70,000 account, and then what's this other one? This is a combined 2 accounts at 12,000 or 24,000. So we got cash sitting on the sidelines, yet we're making 15% on the total amount of money. You say, well, you could make that much more if you had all of it in there. So, well, that's true, but you wouldn't have anything to trade with. You would have to then add money. So this all comes down to how well you can trade and how well you can manage money. It has nothing to do with the news. It has nothing to do with what's going on in China. We don't care who the president is. I don't care what's going on TV. I don't care who won the Super Bowl. I don't give a shit about any of that crap. All I care about is, can I manage money, and can I turn it in? Can I double my money as quickly as possible? So hopefully that'll sink in for everybody. I know it takes time. It's a hard habit to break when you start listening to other folks. You know, you gotta trust the system. You gotta work the system. Take your time, learn it. If you learn it, you'll be successful at this. You don't have to worry about anything. Money is a big worry for a lot of people. But one thing is, you better get debt free first. Don't try to think you're going to borrow money like Michael Saylor's doing and think you're going to, turn into a billionaire like him. He's not what he appears. I'll guarantee it. Who knows? Bitcoin may go to the moon. It may go to zero. We don't know. I believe in it, but I'm not willing to, take my life savings because some dude, I have no idea. All I know is he was investigated by the SEC back in 2000 or whatever, and had to pay back, I don't know, or lost $6 billion. So, I mean, things tend to happen to bad people, and you notice he doesn't talk about that kind of stuff. So, but anyways, that's just kind of a side note. But anyway, I got to get out of here. I got to get on the bike. Got to go out for a 2-hour ride. So we'll see you guys in the morning. If you're looking at this after hours, make sure that you annotate your charts correctly, and make sure that you're putting your max shares on your charts. I don't do it on the Mosaic because I don't want to confuse myself between the Classic, because that's where I do my trading. If you're using any other type of platform, always annotate your stuff and make sure that you don't have to be fancy with your stuff. You can do an Excel spreadsheet like this. It's real simple. If you need help, just give me a shout and I'll help you out with it. It's just simple stuff. You just have to know how to use these. It takes a little bit to get used to them, and you make cute little charts like this, and you can see how things work. Like, we always seem to cross after the first week. We beat the dividends, right? It seems like that happens on each one. That was a little bit later, maybe 10 days later, and same thing happened again. So we just keep repeating what works. This has been working. I can't remember when I started doing this, but after 30 years, I mean, come on. Anyways, later on, guys.